Welcome back to Ticker News. Well, oil prices closed out their biggest week of losses in more than 9 months, with another down day on Friday as investors sold futures in anticipation of weakened fuel demand worldwide due to a surge in COVID-19 cases. For more, we're joined by Mr. Kunal Sawhney. Great to have him back, CEO of Kalkine Group. Hello, sir.
Adrian, how are you doing?
Going well. So let's talk about oil in particular. It's not something I've spoken about in recent times, but what is the latest in this space? What are you looking at?
Sure. So oil prices, Adrian, they have been under pressure in recent days. The commodity has staged a good rally over the last 1 year. Brent oil futures for October surging by over 50%, and Brent crude crossed a $75 per barrel mark in July this year, hitting a session high of 76 a barrel. So the crude oil price has been buoyed by hopes of improving demand due to economic recoveries across geographies, as well as supply cuts by key oil producing countries. So it's two things happening at once. Improving demand plus, cutting off the production, and OPEC and its allied producers have embraced production cuts early during the year. So for once, they're not fighting amongst themselves. They're saying, yes, we will cut the production. And a part of the credit also goes to effective containment of virus spread in major advanced economies early during the year, which allowed them to lift travel and mobility curbs. So it's not obviously happening in Australia, but as we know, UK and US and Europe, they are open for travel now. And also, if you look at the hefty pandemic-related economic stimulus, that's also helping the recovery in fuel demand, and oil prices are going higher because of that as well.
Let's have a look at some specific companies, particularly on the ASX. What are you watching? Which ones in particular?
Great question, Adrian. You can look at Oil Search, up by more than 20%, BHP Group over 15%. So in the past year, these companies have done really well. Cenex Energy up by over 40%. Strike Energy in the past year up by about 24%, and Santos up around 24%. So on the back of upside momentum in oil prices, Santos recorded a robust profits and sales in first half of 21, while rewarding shareholders with a 165% jump in dividend payouts. And moreover, BHP also recently announced a record final dividend of 200 US cents per share on the back of strong, really good growth in commodity prices.
And in terms of what's going on around the world at the moment, Kunal, with a surge in cases in certain countries, not everywhere, do you expect that to have a bit of an impact on oil over the coming months and maybe a bit longer?
Yes, so oil prices are currently falling on virus concerns. The Delta variant is obviously, is not helping the oil price, let's say that. And
Yep.
A group of analysts still believes that the demand-supply balance will continue to tighten in the coming months, when OECD commercial crude oil stocks have already plunged to pre-coronavirus levels. So they're optimistic over OPEC's timely intervention in supporting oil prices as and when required to sustain upside momentum. So I think OECD is working really well. And the impact of Chinese lockdowns and travel restrictions on fuel demand, we cannot neglect that. So that has been keeping oil prices under pressure over recent days. And meanwhile, US President's administration is also worried about high oil prices and wants OPEC and its allies to boost production to lower prices for consumers. So given this scenario, it will be very interesting to see how oil markets will deal with the next stage of the coronavirus recovery. But I think the key thing over here is OECD is keeping a very, very tight watch on their crude oil stocks.
A story to watch for sure. Great to chat, Kunal. As always, we'll talk really soon.
Thank you. See you. Bye.